What is going on YouTube? It's Sankin. We are back with another one. Alright guys, so in this drop my aim is to help you and guide you over the next couple of trading sessions with regards to what stocks not to buy and what stocks to buy as we go through this market volatility. But before I get this show on the road, if you'd like to help out the channel by hitting that like button, and if you're new, join the movement by hitting that subscribe. So it's been one of the most testing days out there in the field for growth plays today across the board ever since this correction started. Now that has opened up good entry prices on some plays, but I want to give you guys the tools and the info you need to ensure you guys know these plays are ready to be picked up, because there's still plays I want you guys to hold off investing in right now based on the charts, based on fundamentals. But I'll run that through with you guys because it's all about helping you guys navigate these markets as we're going through testing times. So let's jump into the first one. The first one on the list, guys, that's Tattooed Chef, ticker symbol TTCF, currently standing $16.62. We are kicking things off with plays not to buy in the market just yet. Now, we've seen management changes in this one, seen them sell out of the positions. That's why you've seen that stock price come down today of over 10%. Now, this one already was not in investor favor over the last couple of weeks. That's why you've seen this one continually fall and struggle to find their support. Now, there's no visible support in line for a while on this play. It could be $15, so you're going to wait for this one to continue falling. There's no point jumping in and grabbing this one right now if they're going to continue to fall to their next support. With these plays, guys, it's all about finding their true floor. So let this one continue dropping if it's going to continue to drop before you consider jumping into this one if you wish to do so. This is a play, they do have potential. They do have, a pipeline to actually grow this business moving forward. They did well in their earnings. However, it's all about good entries on these plays right now during this market volatility. The next play I've got for you, that's IDEX. This is a second play not to pick up in the markets right now. If you guys remember, I said you want to set your stop limits on this play around 260. If there's downwards volatility, it can cash you out if they break support. They did just that, now currently standing 235. Now this one is on course to hit its next support, which is probably around $2. So again, this is a play you don't want to pick up in the market right now. You want to be patient with it. Let it again find its true support. A lot of these plays today have broken through support. So the next stop is their next support. As I say on this play, it's looking around $2. So hold off investing on this one just for now. The next play, that's Alpine 4, currently standing $2.93. The next play not to buy in the markets. They recently delivered their financials. They fell short of expectations. And this is no good for investors, especially in these market conditions. When the market trend is going up, the investors can make leeway, but not in these kind of conditions. Even those plays that smash through earnings, obliterate estimates, they even struggle in these markets. So that's why we've seen this one fall through support. The next visible support on this one is at 250. So I want you guys to hold off entering into this play. This is one of these plays we want to buy in strength because we need to see some good business momentum, need to see some acquisitions, progressing with their existing subsidiaries, things of that nature. So again, hold off in the markets on this one. Now onto the stocks to buy in the market. Up on screen, that's Clean Energy Fuels, ticker symbol CLNE, currently standing $11.85. My previous drop, I ran you through the business update with this one. They made a partnership with Amazon. This is good news. This is a play that's rubbing shoulders with giants in the corporate world. Companies like BP, companies like Total, companies like Amazon doing very well. This is one of the early movers in the RNG space. So when I put them back on your radar, you guys know we like this one under $11.50. I do think you'll be able to grab them in the markets over the next couple of trading sessions in our buy zone. So ideally as close to 11, 11.25 or 11.50. Those are strike prices on this play. The next play I've got for you, that's GRWG, ticker symbol GRWG, currently standing $45. When this one was trading in the 55s, I said you are going to get them back in our buy zone because these market gravitational forces that I tell you guys about are too strong to keep that stocks at those levels. However, they will bounce back. So it's your opportunity to grab them in our buy zone. As I say, this is one of these plays, management is growing them aggressively through their acquisitions that they're making. This is going to be one of the leaders in the space, and I like the way they're going. They've already crushed earnings as well, so they've passed that earnings test in the market that I tell you guys about. So this is a play with big potential, not just for this year, not just next year, but years to come. So switching gears now, up on screen, that's Apple, ticker symbol AAPL, currently standing $134. Now, I want to let you guys know ahead of corporate announcements that are coming over the next couple of weeks, they should be increasing their dividend. Not only that, announcing share buybacks. And those two things should give that stock price some momentum. So I want to ensure they're on your radar right now before they make their climb. This is one of these plays that's going to give you guys a different dynamic for your portfolio if you're heavy into the penny stock plays or if you're heavy into the growth plays. You guys need these kind of plays, these stabilizer plays. As I say, they act as the glue for your portfolios. Now this one deserves to be in the 140s, deserves to be in the 150s, and they will make their climb this year. Us investors have been waiting patiently for this one to break through their consolidation pattern. So I want to ensure this one is on your radar. They're ready to be picked up in the markets. So if you've been rocking with the channel, you know what time is. And this question comes from Miss Platt, says, we need a video explaining in detail how to set the stop limits. I mean, teach us like we're in 3rd grade. So let's dive into this one. Every now and then I like to give you guys a refresher on our stop limits. Remember, we set our stop limits to limit our downside but give us maximum exposure to the upside on these plays. They're very important as we go through market volatility. As a matter of fact, regardless of what market we're in, whether that's a bear market or a bull market, they're important and you guys should get used to it and comfortable setting these stop limits. So I'm going to show you guys an example. Let's take NEO. Now we know NEO's got strong support at $35. So a good idea would be to set a stop limit just below the support line at $34. So if NEO breaks through support, it can cash you out early. So what we do is you hit sell, head over to stop limit. First up, you select the number of shares you want to cash out if there's downwards volatility and if NEO breaks through that support. So we're going to start with the limit price after that. Now the limit price is the minimum price you'll get if there's downwards volatility. So we're going to select $34. Now for the stop price, you're going to select $34.50. The stop price is where that selling process begins and the limit price will be where it ends. So you could end up with anywhere between $34.50 and $34 in this case if NEO breaks through its support. Now we need this buffer so there's time for that transaction to execute between the two. And you shouldn't set your limit price and your stop price too close to each other. Otherwise, if there's downwards volatility, it might skip over that. So in this case, if I select the limit price at $34 and the stop price at $34.01, it's likely that if NEO drops down through its support, it will just skip over your stop limit and your stop limit won't be triggered. So you need a bit of a buffer between these two numbers. Now I like to set around 2% between the two numbers to ensure that the trade is executed. Now a common question I get asked is what happens if in the after hours we see that stock plummet? So in the case of NEO, let's say that stock drops to $30, then your stop limit would not be triggered. However, this happens on rare occasions, so I wouldn't worry about that. So that wraps things up. If you'd like to help out the channel, do hit the like button. And if you're new, join the movement by hitting that subscribe. Also, check our link down below to the Patreon. You could join our winning team over at the Discord. Now, as we progress through the rest of the week, you guys know I'm packing the heat to ensure you guys are able to navigate these markets with me. So I'll catch you on the next one.